The president calls, they come. Today, President Trump, as we told you, met with airline CEOs on one of the biggest storm days. But they came and they talked about tax relief and dropping regulations, surely a much happier subject than snow. 2 weeks ago, he summoned the chiefs of big pharma companies and said, we got to keep prices fair, but I'll help you out by cutting regulation. The automakers were among the first to be invited to a breakfast meeting with President Trump. And let's not forget the union leaders who were thrilled when the president said he wanted them to get good jobs back here in America. But where's the invite to the group breakfast with the Wall Street CEOs? While he has met on an individual basis with many of them, the president has yet to host a breakfast with bank chiefs. Let's bring in someone who's served as a big-name banker, author of the book Own It, Sallie Krawchek. She knows a thing or two about Wall Street, CEO at Smith Barney's, Merrill Lynch Wealth Management, also the CFO of Citigroup, and now the co-founder of Ellevest. Is that planned that he hasn't brought together
it's funny.
whole
I
group of bankers?
Actually thought about it till you mentioned it earlier. Maybe because he's already got him in the White House, and so they're already starting to take action. We've seen, the action on Dodd-Frank, on the fiduciary standard. So I don't think they're lacking for an impact.
Well, he has certainly hired quite a few of them.
Indeed.
Gary Cohn of Goldman Sachs, a bunch of Goldman Sachs people are in there, but nothing wrong with hiring bankers. But I'm sure that there is a point where he wants to bring them together and get their thoughts on Dodd-Frank, because that's the recession-era regulation that came in, more than 2,000 pages, 400 different regulations within it. Can he scale it back? Can he get it trimmed down?
Well, and walk carefully such that you're taking away the things that haven't helped, but keeping our system safe. Look, for all that the bankers are doing backflips over maybe Dodd-Frank goes away, when's the last time the banking industry earned its cost of capital through the course of a cycle? It's been a while. We always think of those peak returns on equity. Oh, the banks used to earn 16%, 20%. Yes, but in the crisis, they gave back many, many quarters, in one case, tens of quarters worth of earnings. So we have to be careful because they have not proven themselves to be the greatest self-regulators.
Well, that's true. But if you had the president's ear and he said, what's the number one thing I should jettison from Dodd-Frank, what would you say?
I'd say the opposite. I'd say the number one thing you should keep is that the Volcker rule, that the ability for banks to do the proprietary trading in-house is not good for anybody. They never proved that they could earn above a market-like return, that they were better proprietary traders than anybody else. It added risk. It didn't really add to the economy. It didn't do anything for the consumer, for the people who elected Trump.
They complain that the Volcker rule is preventing them from being capitalists and making money.
Yeah, so I understand.
Mm-hmm. But you've got to give me something that you would tell Donald Trump the number one thing to get rid of, though. Is it too many stress tests? What about capital on the books? Hey, nothing wrong with dry powder for a rainy day so that the taxpayer doesn't have to
here's the issue, though, right? You think you get rid of capital, and so our ROE will go up and our stock price will go up. Well, we'll go back to your first-level business school finance class. What happens there is maybe your ROE goes up in certain cycles, or certain quarters. Your highs are higher, your lows are lower when you have less capital. You have less of a capital cushion. And it's not clear to me that the stock price through a cycle goes up simply because you reduce your capital. It could be quite the opposite.
Any chance of a full repeal of Dodd-Frank?
You know as much as I do on that. That's speculation and guessing.
But what about this? Could he roll back the worst parts that have swept in the smaller regional banks who didn't deserve to be held to the same difficult standards? Could he at least save them some headache?
Sure, of course, of course.
And how
I know you want me to be positive here.
No, listen.
But look, the guys who've been pulled in, all the talk about bringing the asset managers in. Look, we understand it was the big guys who didn't have enough capital, who all made the same trade, who went into the subprime crisis and really hurt the economy. And keeping the right amount of capital, which is likely more than the bankers are going to want, keeps the economy safe. I mean, look, we can do things like roll back the interchange fee, right, on the credit cards, which came through at the last minute. You said, what? The interchange fee didn't cause the crisis? What's that weird thing?
And now you see that the best performers, if you just look at the financials, since the election, they have so much hope that this thing will be at least sliced down and skinnied down.
And the stock prices have gone up as
a result. Yes, they sure have.
But again, as an investor, I would watch this carefully. Of course, there's going to be, these near-term moves. But again, if you're thinking about it as a long-term holding, these organizations, it's not clear what their returns on capital are through a cycle, and so I would be careful with them.
And you got to read the book too if you want to be careful with your career. It's called Own It, and there's amazing advice in this book on how to own your career and make sure you don't get into the pitfalls that so many other people have done. Sallie, thank you so much.
Thank you for having me.
Sallie Krawchek, Ellevest co-founder and CEO, big babe on Wall Street from back in the day.